The Beef Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at HaneyFarms.com. Okay, we're here for another edition of the Beef Market Update with Ann Dunford. Welcome today, Ann.
Hi, Sean.
And late last week, cattle on feed report came out of the U.S. Reading a lot of stuff that was kind of bearish. Was it bearish?
Yeah, a little bit bearish compared to what the trade was expecting prior to the report date. So one of the things was we had on-feed end up at 5% more than a year ago. We were expecting closer to 4%. I think where the surprise came from was really in the September placements. It came off at even with the year ago. The expectation was close to 4% smaller. But when you look at the weight breakdown of the September placements, again, it's weighted very heavily to the category of under 600 pounds. So all the other categories, 6 to 7, 7 to 8, and over 8, were all down compared to a year ago. But the under 6 weight category was up 34% compared to last September. So this is again a carry-on of what we talked about in August. This is again going back to the main storyline that's been the case in the U.S. for the last several months, is this drought continues to send forced cattle into feedlots because there's nowhere else for them to go.
Having said that, with all the cattle coming to market, the feeder market continues to be strong on both sides of the border.
It is, but again, you know, remember that this is kind of taking that pie and moving it around, and we've pulled some of the pieces of that pie together sooner, faster, but they're still light cattle. They're still going to take some time. And for every time we pull a piece of that pie forward, you know the pie is getting smaller at the back end. So one of the things that tells us what traders are thinking about well into 2012, of course, is the futures market. And we continue to have the deferred futures months, whether we're talking about live cattle or even the feeder cattle futures, clear out to August next year, trading at very strong price levels that still give opportunities for these cattle to work.
With so many cattle on feed, any concerns though about will we have enough demand for all this meat?
Well, there's two things. I mean, first of all, yes, we do know there's more cattle placed against the winter months. We've talked about that for a long time. I don't want anybody to say, well, where the heck did they come from? Because we've talked about that for months now. So this placed against supply against December, January, and February is bigger. We're going to see lower prices than we see today. I feel in the U.S., I feel very confident about that kind of a forecast. Demand side, again, lots of things drive demand, whether it's the export market, which has been stout for the U.S., and now all of a sudden we've had an interesting shift on the demand side from a choice select perspective.
Right, and historical, I guess, significance is it's the widest since what year?
2006.
And why is that? What's going on?
Well, there's two things have happened. So we've most certainly been very current in the U.S. industry. They've got less choice cattle in the marketplace today than they say did this spring, or would have a year ago. So you've got a situation where there's cattle being sold very aggressively on schedule, less choice in the mix. So that's a small factor. What the bigger factor was in the last few weeks, there's been a major, or the major U.S. retail buyer change, or subtly change, more than subtly, but has changed his order buy, and that's to a higher percentage choice versus select. So all of a sudden you get a Walmart changing his buy to a higher percentage choice than select, and it has a market move. So we saw last week the choice select spread at $18 for a weekly average. A year ago it would have been $6.
So what does it tell us about the North American meat market now when one buyer, I guess it's the buyer, one buyer just changes their buying a little bit, and look at the effect it has on the marketplace?
Oh, but again, we've talked about the consolidation that's happened in several segments of our industry. Retailers are part of it, both in the US and Canada, and the major ones that control most of the retail end of the marketplace you can name on one hand. So huge consolidation means when one of them changes what they were doing compared to a month ago, it has market impacts. In this case, widen the choice select spread.
Quickly, two last things. You feel there's still more upward run in the feeder market then?
Short run, big runs are happening as we speak. Here we are, third week of October, big calf runs coming. Weather's been great. It's given strong prices have been drawing cattle to town as we speak. So I think given the big numbers that are moving today, I don't think you're going to see much change today, but I do think it's going to hold pretty stout. Having said all that, beyond this, as we still move into 2012, do I think the highs are in? No, I don't.
We're going higher. How about fat prices?
Well, as I said off the outset, I do think that as we get into the winter, I do see more fat cattle. We're going to see the market trend lower into the winter months. But beyond that, as we start talking about the spring of 2012, which is when our highs will happen in the next round from a seasonal perspective, mark down new highs for me there too.
Okay, sounds good. Another edition of the Beef Market Update.